welcome to the show. This is an early Memorial Day weekend update. Doing this video on Thursday, May 26th, and this is an update for Canberra Energy, Metamaterials, and GameStop. Stock symbol CEI. For Canberra Energy, Metamaterials is MMAT, Metamaterials Torchlight Preferred Shares, or MMTLP, and of course GameStop is GME. Let me start by saying I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. So let's get started. Let's start with Canberra Energy. As we know, the financial statements that needed to be filed were filed. So Canberra is no longer in danger of being delisted. They've done their filings on time, so that's good. There is one more filing that needs to be done though for Viking. They filed an NT10Q on May 17th, but that basically said that they will be late for the 10Q on Viking Energy. We'll get to that a little bit later on, but good news for Canberra Energy. They've done well. They've done their filings. So let's look at the stock price. As we can see, the week that they were doing the filings and all that, stock price was going up, which is good. Then once the filings are completed, and the following week, the price came down significantly. So what happened? We had a short attack, of course. So the shorts drove the price down, and after a while, it got down pretty far, so they just let it go sideways. They weren't allowing it to go up, but they weren't also attacking it anymore to bring it down. So if we look overall in terms of Canberra Energy in the space of a year, they've gone down and then sideways afterwards. So they came down from a high of about $5 a share or so. So that led to a lot of people complaining in the Twitter space. Is that how you explain that after the presentation of the most important reports, so as not to delist Canberra Energy, the price barely moved yesterday, right? The reports were, what's going on there? Well, if you look at that, JB Steeler 36 responded that, we were at 57 cents on Monday, so we went up. But, there's a lot of people doing shorts. So JD says, JD stands for James Doris. JD said it's time to go on the offensive. You guys will figure out, if you haven't already, what that means. We'll see what that means. Also, further tweets, he said, I've been in this baby for a while. Seen this thing run 25-30% in a day with absolutely zero news. That's usually when stocks move, when there's zero news. That's what happened with GameStop. And basically, it's a nice day. Enjoy the weather. Okay. Along the way, we saw a filing alert. So thanks, Glenn Dunlop, for this tweet. He said that Schedule 13G was filed for Canberra Energy, and if we look at what Schedule 13D says, it basically says that there's this Discover Growth Fund that is the reporting person. They are somehow affiliated with the Antilles family offices, so the two are related somehow, and they've disclosed that they now have 9.99% of all the common stock outstanding for approximately 39 million shares. Where did these shares come from? They were a result of conversion of the Series C preferred stock. We'll get into what that means a little bit later on. But so Series C preferred stock there's not very much out there, but what there is gets converted to a large amount of shares. Essentially, as of May 16th, according to the SEC archives of the Form 10Q, Discover holds 0 shares of Series C preferred stock, and Antilles holds 1175 shares of Series C preferred stock. So there's not that much Series C preferred stock left, but what there is can be, translated to a lot of shares. So just FYI, be aware. James Doris, CEO of Canberra Energy, he happened to announce, hey, look, we're going on the offensive May 20th. After all the filings are done, okay? They've been playing defense for a long time. Now it's time to go on the offense. Time to build. Okay, so we'll see what's going on there. Again, I mentioned earlier that all the filings were done except for this 10Q for 10Q for the Q1 of 2022. Okay, so the 10Q is a quarterly report, so they didn't file the Q1 quarterly report of 2022. They said that it's going to be done soon, though. So as a result, we're just waiting for Viking to file its Q1. And the reason is that there's a plan for Canberra Energy. And the plan was to clean up the paperwork of the previous management. That's been done for the most part. We're waiting for Viking to finish. Once that is done, then they can announce a merger. Okay, they've already announced an intention to merge and all that stuff, and for a while. But the plan is to announce a merger between Viking and Canberra. That is that's where we're headed with this. Then do the shareholder vote. So people must agree on the merger. Do the merger. Company gets a new CUSIP. Then all the Viking and Canberra Energy shares get retired, and new shares are reissued as a result. Okay. So steps 1 to 3 may result in the stock increasing in price all the way. We don't know. Step 4 may result in a gamma or short squeeze. Again, not known for sure, but these things can happen. These things have been known to happen, and they can happen. So let's see. Along the way, we see that it's interesting that let's see. We're waiting. So along the way, it says. We're waiting on the Viking 10Q, but the interesting thing is that oil prices and energy is up a lot significantly. The market is leading heavy on energy, and it's quite possible that a larger company may buy Canberra Energy for its oil and gas assets, right? If the price is down significantly, right? We've seen the price is down. Do we have pricing yet? The price is down. I think that's coming up. So the price is incredibly low right now. We're down significantly, and that's a result of short hedge funds, right? So that makes the entire company extremely cheap. When that happens, there's a possibility that the company might be bought entirely by a larger company, right? If a larger company believes the assets are much greater than the market cap, then it makes sense to buy the whole company outright, right? It could be that once one company announces that you could have a bidding war between two companies, and on the same asset, because another company might want it as well. So we might see Canberra Energy getting sold for, I don't know, $5, $10 a share as a result of this. Okay. So the question comes, do I want this? Not really. No, I don't. You might be asking, well, the stock is 70-something cents, or 65 cents. Wouldn't you want this now? No, because I believe that Canberra Energy could go much, much higher without a buyout, right? I think it's got potential here. But a buyout is a possibility, so just be aware of that. And if that does happen, I just have to settle for, $5 a share, $10 a share or something if a bigger company just buys all the shares outstanding. So we'll see. I hope that it doesn't buy out. I hope that it doesn't get bought out, and that we get much higher prices as a result. But what I said about Canberra Energy and all that, that's also true for MetaMaterials and MetaMaterials Torchlight preferred shares. Okay, all of that is also true for that, because those stock prices are also very low. So let's look at MetaMaterials. Okay, MetaMaterials, we see that the price is $1.66. And it's mostly gone up and sideways, I'm saying, for the week or so, right? It went up a bit, and then it went sideways. So that brings me to an interesting tweet by Brandon Nudnarb, or Kreb SBA2. Okay. You should follow this guy. He's got some really good tweets. What he does is he takes a snapshot of, or takes a screenshot of Ortex data, Fintel data, and various other premium services, and he gives you the results for MetaMaterials. It's really good. Here's an example of what one of his tweets are, of his last tweet actually. And if you look at it, it's pretty comprehensive, right? It's a snapshot of MMAT on Ortex. Definitely follow him. It's cool. Anyway. so we can look at over here at this at this data, and we can see that in terms of, well, let's go to the right hand side first, that the CTB min, CTB average, and CTB max are both very high. What does CTB mean? It's the cost to borrow. Okay, so if you're gonna borrow metamaterial shares to short, you're gonna be paying 51% to 165%. That is huge. Okay, that is huge. That's the percentage of interest that you're going to have to be paying in order to get those shares, okay? As a result, if you look at the short squeeze score on Ortex, it's 95.29. It's very high potential for short squeeze here because the price is so low. If we look at the number of shares that's available via Fintel, again, this is from that same tweet, we see that there's not a lot of shares. Often it drops down to 0 shares available. You know, sometimes there's 25,000 shares, but there's really not a lot of shares available left. This is why the cost to borrow is so high, right? And if we look at the short borrow fees from Fintel, this is the same as cost to borrow. We're looking at somewhere around 65% to 57% or so, right? Sometimes you're looking at 100% to, you know, and above, right? I mean, so the borrow fees on metamaterials have been incredibly high because the shares are not available to borrow. That means we're basically in excellent territory for the price to have a massive run up. Okay, and if we finally look at chart exchange data, we see that most of the volume actually occurs off exchange in the dark pools. So most of the trades for metamaterials winds up going to dark pools. That, you know, New York Stock Exchange is only trading 8.71%. You know, everyone else is a lot less, right? Nasdaq is trading 14%. Only 14% of the shares go through Nasdaq. Only 8.71% of the shares go through New York. It's there's nothing going through anything. Most of it's all going through off exchange. And why do we care? Well, metamaterials along the way has been making announcements. You've probably seen this in one of my last, in one of my recent videos. They were granted a patent for non-invasive glucose sensing system, right? It's really good. They were granted a patent by the U.S. Patent Office. It's awesome. There was a tweet that recently came out here by Ted Lee too. Ted Kentros. All right, he says, when GlucoseWise comes out, Dexcom will be a competitor. In my opinion, there's no competition. GlucoseWise is completely non-invasive, no pricks, no patches. This could be your potential share price with GlucoseWise alone. 6 months ago, Dexcom was $650, so you could be $287 a share. Well, and then he did. I just expanded it on his tweet, but this is his full tweet or his full image on the tweet. Okay, so he provides a lot of information about Dexcom, etc. And in actuality, I had a look at them on Yahoo Finance. Their market cap is $27 billion. This company's huge. Because, it's not so much the share price, it's the market cap that matters, right? It's not just the price, because you could have a small number of shares out there. But $27 billion, the potential for this is gigantic, okay? We also know that John Berta, he also made a tweet. He recently visited their Pleasanton office over here in California. He was quite impressed. We've seen the images of the microwave oven demonstration from metamaterials, right? You got a clear glass window in there. You don't have to peek in through wire mesh where you can't see anything that's going on. And so it's a clear differentiating factor for microwave oven makers. You can have clear glass there instead of having a wire mesh behind the glass. It's nice. But that's just some of the technologies they have available. Okay, they have a whole slew of other technologies, including nano web for EMI shielding. They've got anti-laser stuff called laser reflecting glasses for eye protection, things like that. There's big military applications there for laser glare protection. AR fusion, right, for the augmented reality market. So there's a ton of other things that metamaterials does, as well as the two that I just mentioned. Nanoweb alone could be in the 5G space, and that could result in a huge upswing, right? So MetaMaterial has been doing good. They've been making some good progress along the way. Okay, which brings me to MMTLP, MetaMaterials Torchlight Preferred Shares. This is the this has to do with oil and gas, because when MetaMaterials and Torchlight Energy merged, there were oil and gas assets held by Torchlight Energy, and those assets were intended to be spun out. They're intended to be sold, basically, and provided to the Torchlight shareholders, who were given Series A preferred shares. Those Series A preferred shares, after some time later, became MMTLP, MetaMaterials Torchlight Preferred Shares, and they became tradable on the open market, even though MetaMaterials and Torchlight did not want them to be tradable. In either case, long story short, the shares were tradable, but the shares represent about 3.2 billion barrels of oil reserves. It's not proved. It's in the process of being developed, so once it gets developed and proved, that'll be worth a hell of a lot of money. And, these assets were around when oil was, negative $47 a barrel. Now oil is over $110 a barrel, so those assets are worth something, okay? They're in Texas, and they're in the Oro Grande Basin. They're very close to El Paso, which has a refinery. So, yeah, that's where they are. They have a bunch of wells over here. I just listed them out. I just showed, what the wells might look like. This is the 825 well, by the way. And if we see, there's some, samples over here of the 825 well itself.
You can really see that greenish tint in there now.
Anyway, they've got a 41 degree API gravity on the oil sample at that well, so it's yeah, they're in pretty good shape there with that. That was an oil sample there. Anyway, MMTLP, if we look at it for the week or so, or 2 weeks or so, because I haven't reported it on a while, it ended around $1.30, and that means it's been going sideways for the most part. And if we look at it over the history of its of the time it was tradable, it's been going sideways for the most part. These shares represent a huge liability to Torchlight shorts, because if we're getting paid out $25, $35, $100 a share, I mean, the price of oil is huge, right? It could be anywhere from, on the low side estimates, people have been estimating $25 a share. I've been estimating somewhere in the range of $50 to $100 a share, depending upon what they get for the price of oil. So what's the plan for MMTLP? Well, the plan is to spin out the oil company first, right? And then do some limited production. Once you do the limited production, you're going to convert the designation of those reserves to proved. Okay, this means that the price of the Oro Grande project goes up significantly. And at that point, you're going to probably drill, you may or may not drill some more test wells to see if there's more oil out there. Certainly you have to drill 5 more test wells before the end of the year, but, we'll see. And then, once you've done the proved, you want to sell those oil and gas assets for maximum value and pay out the dividend to the MMTLP shareholders. That's the plan, right? So, yeah, that's what we've been wanting to do, and hopefully that'll happen. But in the meantime, the price of oil continues to be above $100 a barrel. I think it's 114 last I checked. That means the average price of oil is moving up, and it's moving up towards $100 a barrel and above. And the value of that Oro Grande oil and gas assets are moving up as the average price of oil is moving up. Now, oil producers in the US of A are having a hard time meeting demand because, summer's coming up and people want to drive, but the price of gas is already high. We've got a war in the Ukraine, but even before the war in the Ukraine, the price of oil was headed around $95, $100 a barrel because it just was. Anyway, we know that the Biden administration recently canceled some oil and gas lease sales Recently, the Department of Interior cited a lack of industry interest in leasing the area. Check it out. Links will be provided, of course. But the Texas Permian Basin private land does not require a lease from the federal government, so that makes those lands even more valuable. And oil producers really want to take advantage of these high oil prices because who knows how long they may last, right? So the question comes up, would producers, would potential buyers want to do their own investigation, know for themselves that there's 3.2 billion barrels of oil out there and make an offer before the assets become, quote unquote, proved? Because, when that happens, price is going to go up significantly. So, who knows? I don't know. We do know that Berkshire Hathaway recently made a purchase of Occidental Petroleum. They bought a large amount of Occidental Petroleum. Warren Buffett seems to like oil recently. So let's talk about GameStop. GameStop is the last on our list. Why are we talking about GameStop? Well, there's a plan for GameStop as well, too. The plan is a split dividend, right? So there was a proxy vote that was sent out to shareholders of GameStop. Shareholders voted, and we'll see what the results of those votes are. I believe it was successful. If it wasn't already, I don't know. Anyway, there was a vote to approve additional shares. I believe that was successful. I don't know. Anyway, the plan is to vote for a split via dividend, right, at the annual meeting. What does that mean? What that means is if they're going to issue a dividend of shares, right? So that means that if you say do a 5-to-1 split, 5-to-1 dividend, say via split, you want to get a 5-to-1 split. So that means you got to, if you have one share of GameStop, you're going to get a dividend of 4 additional shares to reach that 5-to-1 split, right? But, the shares don't appear magically. They're not immediately split. They're split via dividend. That means if you've lent out your shares, by the way, you're now going to have to pay taxes on those dividends. What? Yeah, you're going to have to pay taxes on those dividends if you're lending out your shares. Now, this does not affect anyone who does not lend out their shares. Who do people lend out their shares to? They lend them out to short sellers, right? So because of that tax situation, the institutions who have been lending out their shares will likely not want to pay a bunch of taxes. So they're going to probably recall their shares because it doesn't cost them anything to recall their shares. Just recall the shares and then lend them out afterwards, right? But when you recall your shares, what's going to happen? The shorts, have to get those shares from somewhere else. Not only do they have to get the shares that have been recalled, if they still maintain their short position, they will have to pay the dividend of shares. That's right. If it's a 5-to-1 split via dividend, that means shorts would have to pay for additional shares in addition to the one that they have to get. What could that do to the price of GameStop? Well, I'm sure you can just imagine. In the meantime, we've noted some activity going along the way. There's been a lot of negative posting coming along. I've noticed on Twitter and various different places. And where's all this negative post coming from? Is it coming from longs who sold? Well, they might post. They might say, I'm out, and then stop posting. That's about it. That's likely what longs would do if they're out. But I don't think that's happening. Why would, why would the people who post, they seem to be posting negative stuff all over and over and over again, right? Why are they spending time and energy on something they've already sold? So I don't think it's longs that are sold. Chances are if you're long and you've sold, you're probably going to say, it's too much for me, I'm out. That's it. And that'll be your last post. And then you'll move on to something else that you find interesting. We're not seeing a lot of those posts, Is it longs who are becoming frustrated? It's possible. But, they might post about their frustrations. That's about it. But I think that's not likely either. I think it's mostly shorts and paid shills for the shorts, right? They're very likely to post because they want to incite FUD, fear, uncertainty, and doubt. They want to incite selling, and they want to drive down prices. That's what the shorts want. That's probably where the negative postings are coming from. It might also be coming from people who understand what's going to happen to the stocks, right? These people want to buy the stocks at a lower price than is currently available, right? They want to drive prices lower and buy at an even lower price, right? So that's another place it might be coming from. I don't know. I don't know. This is just speculation on my part again. And that brings me to this video, which I think you should check out. It is from the Jist, and I came across this video via Syntax on Twitter, and also John Berta. They both tweeted about this. This is pretty cool. Give them a shout out and a link. I'm going to provide a link to Syntax because she deserves credit for this. Anyway, this video is really cool. Came out today. It's about Executive Order 13959, and you may be asking yourself, what is this about and why do I care? Well, apparently there's about 75 Chinese companies out there that basically became worthless collateral. Why do I care? It's because they're big companies, and a lot of institutions own those companies. When those companies become worthless collateral, that means that those big institutions are going to get margin calls because a lot of their collateral just went away. Poof, magic, puff of smoke. When you get margin calls, you're going to be closing positions. Basically, that's what's going to be happening. Means longs will sell, shorts will buy. Okay. What does this affect? This affects GameStop, AMC, MetaMaterials, and Canberra Energy, I believe. So this video talks about GameStop and AMC by, The Butcher of Wall Street. I believe it also will likely affect Canberra Energy and MetaMaterials because those are also heavily shorted stocks. And if we look at it, basically, I'm not going to play the video for you, but I'm going to recommend you check that video out. It's really good. It basically says that around, January 28th, 2021, there were about 35 military companies from the CCP that were no longer viable as collateral on U.S. exchanges. This was an executive order signed by President Donald Trump. And interestingly enough, the prices of GameStop went up dramatically on January 28th. Okay, so we see here at the bottom of this intel or note about that particular executive order. It originally was not planned for January 28th. It was planned for earlier, but it got extended out to January 28th. Okay, so Executive Order 13959 had that effect on GameStop. Was the result of that. There was an executive order that was put out around, I believe, June 3rd or so. Executive Order 14032, which gave back the collateral for 365 days temporarily. That order is about to expire, which means the prior Executive Order 13959 comes back into effect. Except now it's going to be about 75 plus companies. Because in, I believe, February of, I'm not sure about that February date, but somewhere around February, the U.S. Treasury made an amendment and they added a bunch more companies. So now it's around 75 plus companies. And that means that on June 3rd of 2022, which is coming up soon, Executive Order 13959 is expected to go back into effect. Could that cause a huge price rise in GameStop, AMC, MetaMaterials, Canberra Energy? I don't know. I don't know. Anyway, Memorial Day is coming up. The New York Stock Exchange will be closed on Monday, so it'll be a short trading week. Might anything be happening on Friday by the time you guys see this? I don't know. But that's it for me. I'm gonna say goodnight. Talk to you later. And this is not financial advice. I am not a financial advisor. None of this is financial advice. And this video is intended for entertainment and educational purposes only. So, goodbye.